speaking about the power of compound interest and starting early. Paul, so break it down for us.
Thank you.
For many of us who are, who don't really save, why is compound interest so powerful when it comes to saving? We've learned it, more about, when you go for money and you're paying, and it's always compound interest, then every day you need to pay. But tell us the relevance of compounding in savings.
Thank you, and good morning again to our listeners. And I want to encourage if you are listening to us, call somebody to tune in, because I think it's the best blessing you can give to a friend, to a lover, to a close one. Let me make some important statement, and I'll start from where you ended. For a number of us, we only experience power interest when it's working against us. We have not experienced it when it works for us. We experience it when we have borrowed money. We have not experienced it in using the power of compound interest to create wealth. See, wealth is not built by how much you invest. It is built by how long your money is allowed to work. Some important statement to start. You see, the difference between financial struggle and financial freedom is often just one word: time. Time. Waiting to invest is an expensive decision. If you're waiting that when things get better, then I will start investing. Compound interest is not loud, not flashy, not exciting, but it quietly creates wealth while you sleep. Just some punchy statement to start. Compound interest does not forgive delay. It rewards patience and punishes waiting. And maybe the final thing I would say to start is that by the end of this conversation, some of you will realize that waiting to invest has already cost you millions. You just need to start. So we're having a conversation on the power of compounding and the advantage of starting early. One of the most misunderstood, yes, the most powerful idea when it comes to something to understand, when it comes to personal finance. Compound interest is not magic, but once you understand it, it feels like magic. In fact, if you understand compound interest and you take advantage of it, you become a money farmer.
Money farmer.
Yes.
Money farmer.
Yes. You are into farming. What do you farm in? Money. The way people plant cocoa.
Help me understand that, because if I plant cocoa, I know that after a certain number of years, I can make sales. If I do my favorite pig farming, I know that if I buy a pregnant one, in 6 months, by the time it gives birth after 4 months, 6 months, so in a year's time, I'll start selling my first pigs. If I'm farming money, when do I know that, okay, I can make some money?
You see, so the same way we talk about pig farming, grass cutter, whatever, and it multiplies, it's the same concept I want people to bring to money. The way you can start with one animal, cross it, and then within time you have several of them. That's how money grows. In 2006, and I want to make it very practical, I asked myself one important question, and it's a question I've asked a few times. And if you are listening to us, you haven't asked yourself this question, you need to ask it, because we're talking about the power of compounding, but we need to talk about the why. It's important people know why they need to pay attention to the power of compounding. I asked myself this question: if I didn't have to work from today, how many months, how many years could I survive without salary? It's an important question I asked myself the year 2006. I sat down with Linda, my wife. We did some analysis and we realized that we had a negative net worth. In other words, if we sold everything in the world, it wasn't going to be enough to pay for the loans we had contracted. But we were not even conscious about it. We were not aware. Charlie, we're walking in town, chest out, not knowing that, at that time. So once we became conscious of that, we took a decision and we started working at it. And I've asked this question a number of times. I asked the same question at the Pentecost Convention Center the year 2015 when I was running a retreat for a school. school management teachers on financial planning, and a teacher who followed up that I want to be a money farmer. I am teaching, but I also want to be a money farmer. Sent a WhatsApp to me, and I will read it to make to answer your question. He said, "Bless you, director. I'm indebted to you for opening my eyes to the power of compounding. Sir, I just realized what you have been saying. Money works harder than us. I just decided to check my interest for the month, and even though today is 25th, I've made 62,300 cedis already for the month. I have made already, still about 5 days to go. Incredible. Indeed, money works harder than us. I am grateful. My daily returns has shot up to almost 2,500 cedis each day averagely. Grateful, sir. I am still building and topping up each month seriously. Thank you." He's become a money farmer. So you invest.
He makes his interest is what 2,000 a day.
2,500.
Oh, that's good.
A day.
He's doing something right.
Oh yes, and you see, he's done that. This is the 11th year, so it doesn't work overnight. In fact, the conversation we're having around the compound interest and making money, becoming financially independent, it's not a sprint; it's a marathon. So I know a number of young people will tell you, "I don't have patience. I want to make money now." We are not here to talk about making money now. We are here to tell you about something you can do that with time. You are sure you will get there.
Okay, Paul, let's do it this way. So there are people listening to us. You see a lot of the young people want to make money now. There are people listening to us now who say, my salary is not enough.
Yes.
So you're telling me to put some money aside.
Yeah.
Meanwhile, the salary is not enough to take me home.
Yeah.
So what do I do?
There are two things I would say. The way to find the money to invest, one way is to cut down on expenses, and the other way is to increase the inflow, or if you can do both. How do you increase the inflow? How do you reduce the expenses? If you can do any of them or you can do both, you would find some space. But you see, when people say the salary is not enough, there is a law called the Parkinson law. It explains why most people retire poor, even after earning substantial income through their working years. The Parkinson law states that no matter how much people earn, they will always adjust their lifestyle to match their salary.
Yes.
So as salary is increasing, people will adjust lifestyle. Let me explain. I spoke at a conference in Takwa, and then I asked one important question. Big conference. How many of you are not investing because your salaries are not enough? Let me see by hand. Winston, guess what? The whole auditorium. All the hands went up. Then I did a follow-up question. How many of you believe that if your salary is doubled from today, you will have enough and now you can save and invest? Let me see by hand. All the hands went up. If the salary is doubled, remember, I'm a guest speaker. I don't know them. I just called 10 people at random. Give them pieces of paper. Each of you write your current salary for me. Among the 10, the lowest income, and I was earning 350 cedis a month. For some reason, this guy earning 350 cedis a month believes that if it is doubled, it's going to be enough. A double is 700 cedis. But among the 10, there was one earning 5,000 cedis, one earning 11,000, who thought it's not enough. The highest income earner among the 10 that I called at random was earning 20,000 cedis a month. So the guy earning 350 thinks it's not enough. The guy earning 20,000 thinks it's not enough. I am a financial planner. I do a number of personal session with people. I've met people who earn 100,000 plus who also think that it's not enough. Because people would naturally adjust their lifestyle. We had a conversation about the cars last week. You know, when the young people start life, they pick Trotsky. When our salary is increasing, they move on to the boat and Uber and all that. It gets to a point they buy a car. But watch it. If you know young people who got married 10 years, 15 years, 20 years ago, you watch it. As salary is increasing, people change their cars. Levels don't change. People upgrade themselves. And there is nothing wrong with upgrading yourself. Don't get me wrong. As long as you are getting into money farming, as long as you are putting something away into the future. So I would recommend strongly, if the money is not enough, you start with the 10-20-70 principle. Pay, if you believe in tithing, 10%, but 20% of every earnings must go into investment. Anybody who can put 20% away every month, 20% away every month, can build up something decent into the future. So my first recommendation, put 20% away. Automate it every month. Let 20% go into an investment. The second thing I will recommend is that invest all windfalls. What is a windfall? A windfall is any money you haven't budgeted to receive, because you will live your life without that. I was in a church in Tema and I talked about windfall December 2025, that invest all windfalls, because you didn't expect a windfall and you would have lived your life without that. Somewhere January, somebody came to my office who was in a church who said that, Paul, I am completely blown away, because in 13 days in January, I have windfall of 11,000 cedis. But I have been having these windfalls in the past. The envelope comes, it's in the car, and before I realize it's all gone. For the first time in 11 days within the year 2026, this person had 11,000 cedis windfall. So invest all windfalls. We should remember that within every income there is food and there is seed. Just like in most fruits, you find seed and you find food. It is the food that is for consumption. The seed is not for consumption. The seed is for farming. It's for sowing. It's for planting. It's for the future. And I am recommending the seed to be 20%. So automate that. But the way to do that, you got to watch spending habits. So we'll come to the power of compounding. But the way people can find the money to invest, if you are thinking the salary is not enough, is to watch your spending habit. Watch first time spending. Any major expenditure you haven't done before, pay attention to it. Building your first house, Kojo will tell you, anybody who builds a house, all other things being equal, if you ask them to build that same house again, they will spend less, because they would have learned all the tricks. Your salary must dictate what you eat, not your appetite. Last week we had good conversation. Some of the boys, the only thing they had was high life.
Yes, but they need the high life account.
Yes, but we mentioned other things. Those who don't focus on only the high life.
But you must work hard to get the high life.
Yes, your salary must dictate what you eat. Winston, there is some salary you can do all the big hotels in town, but there is a salary you do cocoa with kose, you will be fine.
Or actually with granules.
Thank you. There is a salary you don't even do breakfast. You do what is called brunch around 10, 11. You get some yoko gari with enough gari in it with 2 sachets of water. You will also be fine. So your salary, look at your boys. One of your boys is nodding his head. He said, Charlie, the man is speaking my language. Your salary must dictate what you eat. Avoid impulse buying as much as possible. So we are talking about spending habit. Check the receipt anytime you are buying from the supermarket, from the malls. Because I have seen situations not once, not twice, not 3 times. The price on the shelf is completely different from what it is in the system. So 180 cedis is displayed. Sorry?
There's this shop. I went to buy something. You see the thing on the shelf as maybe 18 cedis.
Yes.
You go to the counter to pay and it's like 20, 24 cedis.
Exactly. And when you complain, because when you go to the malls, watch, people never take receipts. They get to the counter, how much? 1,800. They pay and they walk away. I take receipt, I scrutinize, and I've experienced, I've lost count of the number of times where either the price on the shelf is different from what is in the system, or something is put on your receipt you didn't buy. So check the receipt. You don't throw away leftover food. Anytime you throw away leftover food, it is money you are throwing away. You don't borrow to consume. You go to the market with a shopping list. You don't live your life to impress anybody. Don't be in competition with anybody. Put your children in schools you can afford. Drive what you can afford. Drive what you can afford. The grass may look green at the other side. It may be synthetic grass. So we need to sit back. We need to ask ourselves some questions, Winston, and then we can find the money to invest, because the salary is never going to be enough.
Okay. Now, that person that, for instance, I got someone asking a question. So the person who by 25th had interest of 65,000, how much did the person invest?
The person invests in bits over time. So it's not something that happened overnight. In fact, when you start this journey towards financial independence, it's like building a house or planting a tree. The initial stage, if you are not careful, you don't even know what you have done. If you have seen somebody building and you see the foundation, when they start digging the floor, it doesn't. you will not be able to get where they are getting to. But it's when they put a roof on the house, it's painted, then you see what was being done. That is how this journey starts. When you start, it is slow. As you are growing, it escalates. In fact, it's easier to move from 100,000 to 1 million than from 0 to 100,000.
How?
Because if for the purposes of the discussion, if you use 20% as interest, if you have 1,000 cedis and you get 20% on it, you get 200 cedis. But if you have 100,000, you get 20,000. If you have 500,000 and you get 20% on the 500,000, you get an additional 100,000.
Yeah.
But if you have 10,000 cedis, you only get 2,000. So the point is, the bigger the base, the faster the journey becomes, the quicker you get to your destination. So this guy who is a teacher started small, but he really got breakthrough in 2020 during the COVID, when schools were shut down, and he did a number of these online classes because schools were shut down and students needed to be taught, and made some extra income. But I also know that he's been doing some catfish farming. He's been doing some poultry on the side. You know, one of the days we'll discuss multiple streams of income, because he's gone beyond just the salary and he's looking at other things. But the good news is, as at close of last year, he was making 75K a month just as interest.
Wow. 75,000 a month.
Yes. Listen, if you use 18% interest, do you know that anybody listening to us who can do 5 CD a day or 150 CDs a month at 18% compounded quarterly, within 27 years will make 1.1 million. If you can do 600 CDs a month, within 19 years you cross a million. 1,005 a month, within 14 years you cross a million. 3,000 a month, within 11 years you cross a million. 6,000 a month, within 8 years you cross a million. You build up little by little. It won't happen overnight, but you will get there. You know, you will get there. So
then the question is about time value of money. So
good.
The million you're getting in 8 years.
Yes.
What value would it be in today's, market?
So when you are investing, there is something called the nominal returns and the real returns. The nominal return is the total returns you are making. The real returns is when you have stripped off inflation. So, for example, today inflation is less than 4%. Let's use 4% as example. If you are investing, you are getting 10%. It means that the real returns you are making is 6%. The difference between the inflation and then whatever interest rate you are getting. But to answer your question, the 1 million you are getting in 8 years is 1 million. What it can do today, you cannot do in 8 years. But if you don't have the 1 million, your life is worse off. So the way to catch up with the time value of money is to make sure that you are getting returns ahead of inflation. If you are getting returns of ahead of inflation, then you are covered. It's as simple as that. But you cannot control inflation, which eats away the value of money. So you can't control it. So don't bother yourself there. What you can control is your own savings and investment, and taking advantage of the power of compounding that you can control. So let's focus there, and let's make sure we are building enough such that in 8 years, in 10 years, whatever value you have, it's more than enough to take care of yourselves. If you came to me, you want to do 1 million in 10 years. Of course, I know you are thinking about 1 million today. So I'll use inflation proxy and give you the equivalent and let you know that if we want to get the same value, what 1 million can do today, then in 10 years, we don't need 1 million. We'll probably need 1.5 million so that you have the true value of what 1 million can purchase today. But that question, everybody needs to ask themselves, if you didn't have to work from today, how many months, how many years can you survive without salary? If it's less than 1 month, then it's life-threatening. I mean, the average worker must have at least 6 months of income cover. Minimum 6 months of income cover. When something happens, you know that the next 6 months I can live my life. But this teacher who we are discussing, when you ask him that question, at the moment, his answer is the rest of my life. Because he's on a salary of 6K, but he's making 75K a month.
So those who get a salary today and in 2 weeks they are hot, they are in ICU, right?
they need to see they look. They need to see a doctor immediately. They need a surgery. And you see, this is a conversation we must not be shy to have. And there are a number of financial planners in town. There are people who are certified. They don't collect money. You just need to walk in, book an appointment. They will strip you naked. I mean, naked, not as in physically naked. But I mean, if you come, we do what is called computation of net worth. We look at your assets, we look at your liabilities, we look at the income generating asset. We ask a number of questions, and based on that, you can have a plan. Sometimes a person is nice to you. You need to bring them out first. They have a negative net worth. You need to work on that first before they pick up and they start their journey. And I've lost count of the number of people who come in and ask, are you sure this thing works? And in 10 years, they are completely blown away. In your other life, we had a conversation one day, if you remember, on this same subject matter, Kojo, and a lady came to the office, Winston. This lady started his journey, Operation 1 Million, in 2020. She came, she brought a statement to me end of last year. She was at 960,000 Ghana cedis. She said, I cannot believe that it's possible. You see, the thing about the conversation we are having, once you start, something happens to you.
Yeah.
Once you start, you become more conscious about money, about spending, about budgeting, and it does something to you. And especially when you see your money growing. I've seen people who have come and they are almost in tears. They cannot believe that they have 10,000 Ghana cedis, because in all their life they never dreamt that there is a point I can get 10,000 Ghana cedis, and that excitement does something to you. I have a friend who is a pastor in one of these churches. 2020, I said, let's start Operation 1 Million. He said, I said, look, let's start. He comes in twice a year, then we'll have a conversation. Winston, the last time I met with him, he had crossed 400,000.
Wow.
Once you start this thing, once you have an end in sight, it does something to you. The way you even treat money with respect. You know, I was in a meeting yesterday, and one of my friends, I know we some boys were in a meeting, Francis Akucha and co. And then one guy said, there was some expenditure. One guy said, oh, previously I would have taken it up. But after I met Mr. Mantis, he said, many was come. So once you are conscious about that, bro, look, a rich man once said, if you took all the money in the world and divided it equally among everybody, it will soon be back in the same pocket it was before. There is something about money we need to understand. And once you understand that, you don't need super income to become rich. You don't need super income to take advantage of the power of compound interest. You need steady income. You need consistency. You need time. And we have said it over and over. It's not going to happen overnight. You're going to build up little by little. The law of first creation states that everything is created twice. First mentally and second physically. Without the first creation, you cannot have the second creation. Your first million Ghana cedis, your first $1 million will be created twice, first mentally and second physically. So let your mind accept that this is possible, and let's start the journey little by little. We can get there. Gone were the days where the traditional thinking works, or it worked. Get a good education, find a good job with some secure benefit. You work till you are 60 and you get a good pension. It belongs to the old school. It doesn't work in the year 2026 and beyond.
Okay.
Winston.
What we'll do when we return after these messages, we're going to be reading a lot of the messages from our listeners, they're sharing it with us, but also we will practicalize it. So
Sure.
Let's say I want to retire with an interest rate of 10,000 cedis every month.
What should I do?
What should I do?
Yeah.
So we want to practicalize so people can appreciate all of
No
this.
problem. Yes, listen.
You've been talking about things that actually work for those who are 20-something, 30 years. Let's come to those of us who are in our 40s. And those who are in the waiting room 50s. So for those people, what should they do?
You see, it's better late than never. For those people, what they can do is to quicken the process a bit, because they don't have, time, we cannot reverse time, and that is the truth. For the younger people, and I keep getting this question from a number of people every day. For the younger people, it's easier. For the older people, you don't have time, so you need to double up. And when it comes to investing, there are two things. Okay, let's say about three things you can do. One, you can do monthly commitment, where you put money away every month. Number two, you can do a lump sum. Number three, you can combine both the lump sum and the monthly commitment. And maybe number four, you can combine the lump sum, the monthly commitment, and make sure you are escalating. You are increasing the monthly commitment on an annual basis. So let me explain with some examples. And I'll use 18% for our analysis. Treasury bill rate, 91-day treasury bill rate, the last 5, 10, 20, 15, 20 years, 25 years are all above the 18. So let's use 18. If you use 18% and you are committing 100 cedis for the young people, I'll deal with the young people and then we'll look at the older ones. Within 30 years, total investment of 36,000 cedis would have grown to about 1.3 million. 100 cedis. 200 cedis, within 20 years, 48,000 will be 437,000. And I was telling you about how the latter days become, when the base becomes bigger. So 200 cedis, within 20 years, the total amount invested is 48,000. But interest is 389. The total is about 437. But in another 10 years, between 20 years and 30 years, it grows from the 437 to 2.6 million. Because you have a certain base that you are building on. If you did 500 cedis, within 20 years, you cross a million. Within 30 years, 6.5 million. And we can go on and on. 2,000 cedis. And I'm talking to the young people first. 2,000 cedis. Within 20 years, you're looking at about 4.3 million. And we're using 18% compounded quarterly, just the way the 91-day treasury bill works. But if you did 100 cedis and you were growing the 100 cedis by 10% every year, 100 cedis this year, the following year 110 cedis, the next year about 111 or 12 cedis, you keep building up. Within 30 years, you're actually looking at 2.4 million. And people talk about the time value of money. I understand. But the point is, whether you have 2.4 or you don't have, the 30 years will come. We were in this country when President Kufuor became the president of Ghana. In the election of the year 2000.
Yeah.
We are in 2026. It's the election of the year 2000. So time flies. If you are doing 500 cedis, and again, you are escalating, growing it by 10% every year, within 20 years, you're looking at about 1.8 million. And we can go on and on. If you did 2,000, the same concept.
If you did 5,000?
If you did 5,000, I'll do the calculation for you. Let me finish with this and deal with it. Then we can look at different cases and we will do the calculation together. 2,000 cedis within 20 years, you're looking at about 7.5 million. 2,000, growing it by 10% every year. Within 20 years, you're looking at about 7.5 million. But if you did a lump sum of 20,000 plus 500 every month and you are escalating 10% every year, then within 20 years, you're looking at 2.5 million. It's 20K plus 500. If you did 100K plus 2K, within 10 years, it's 1.4 million. Within 20 years, you're looking at about 10.9 million. But let me come to the special case. Those of us on the 4th floor and the 5th floor who don't have a lot of time, let's limit our discussion to maximum of 15 years. If you did 50K plus 1,000 every month, the same concept, and we are escalating, growing it by 10% every year. Within 10 years, it's 737,000. 50K plus 1,000. Within 15 years, is 2 million. So if you are 45 and you're targeting 60, if you did 100K plus 2K, within 15 years, it's 4.1 million. Within 10 years, it's 1.4 million. If you can do 200K plus 4K every month, within 10 years, it's 2.9 million. Within 15 years, it's 8.2 million. Okay. We can go on and on. So if you don't have time, think around how you can do a lump sum. If you can't do a lump sum, try to escalate as quickly as possible. So start thinking about how can I increase my inflows, because if you increase your inflows, then you will have the space to invest.
Okay. This question says, good morning, Winston and Kojo. Please ask Paul Mante where to invest for the compound interest. Is it a savings account or treasury bills?
Oh, you can do treasury bills. You can do fixed deposit. There are several options available depending on your age and your risk. You know, when people come to me, and even yesterday I got two people asking the same question. I want the highest interest. The highest interest comes with high risk. There is always a relationship between risk and returns. So if you can do treasury bill, it's one of the options. You can do fixed deposits. It's one of the options. You can do the mutual funds. You can do the unit trust. You can buy shares on the stock exchange. I mean, of course, if you are buying shares, then it's always advised that you talk to a broker to get some guidance, you know. But I love the collective investment schemes. I love them because you don't need much to start. You can build up little by little. And I mean, in my own backyard, we have products like the EDC fixed income fund. You can start with 100 cedis and you can always add up money. We have things like the money market fund, the balance fund, even 20 cedis. You can start. We have the retirement fund. These are all mutual funds. And the reason why I love the mutual funds is that when you start small, you can add up any day. Momo, you have some loose money, 50 cedi. You can push it into the investment and then you can keep building up. You asked the question about 5K.
Yeah.
If you were doing 5K on a monthly basis, then Winston, within 10 years, you're looking at about 2.4 million. Yeah, if you have a bit of time, within 15 years, you're looking at about 6.8 million. This is without a lump sum.
Okay, well, if you added a lump sum?
If you added a lump sum, how much should we add?
Say 100,000.
If we added 100,000 cedis, within 10 years, we're looking at 2.8 million. Within let me strip out the escalation, so it's 5,000 flat. If it is 5,000 flat within 5 years, within 10 years, you're looking at about 2.1 million. Within 15 years, you're looking at 5.7 million. But if you were escalating, let's say the 5K this year, next year you add another 10%, the following year you add another 10%, then it changes the numbers. With that one, within 10 years, you're looking at about 2.8 million. Within 15 years, about 8.2 million.
Daniel Mate says, Winston, I invested a portion of my salary for 4.5 years and I bought a land at Dodua for myself.
Well done.
Thank you.
Well done.
Thank you.
You can also join us on 05511119997. That's our WhatsApp line. Keep your messages coming. And we definitely would, share all of these with Paul Mante. But there are those who, asking questions. So this one says, good morning, guys. Please, how can those of us abroad get in touch and get some investment back home, since he has not that saved due to immigration challenges going on currently in this country?
Pressure will see you. Pressure
is British chairman one.
Yeah, I think that if you have a bank in Ghana, contact your bankers and ask them what they can do. But if you need a financial planner, you can also call Emmanuel on 0246 455808. Those abroad, or send him a WhatsApp. He's one of my financial planners. 0246 455804. And Emmanuel will respond to you. Or you can call our contact center. We are elevating what we are doing beyond just working for a bank. We are also looking at impacting society. We're also looking at helping people so they can shape their future. You can call the EDC contact center 0302634165. Somebody will respond and give you to a planner to help you.
Someone sent a message that says, while you want to invest based on what happened in the domestic debt exchange, how sure are they that this is not going to happen again? We cannot tell. But for me, the lesson out of the domestic debt exchange, and I've also really got bent because I had full exposure to financial assets.
is the tool called diversification, because you cannot completely avoid risk. What you can do is to put in place systems to reduce the impact if the risk should crystallize. I mean, people have said that, look, because of what happened, I'd rather go into real estate, but there is risk in there. People have said I will go into farming. It is great, but there is risk in there. So you cannot completely avoid risk. I think the key lesson out of what happened is diversification, where you don't put all your eggs in one basket.
Yeah. And what we can tell listeners is that we have a lot of things planned for them. There are conversations we'll have about investing in the real sector, where the various opportunities in very different places, in manufacturing, in agriculture, in real estate, will let you know. There are some startups in this country that are doing very well that want to scale, and you could invest in such startups, take some equity, and so all those things will come up in the course of the year. So we know how to invest.
But
properly.
You see, my worry is the people listening to us now. Don't procrastinate.
Yeah. Well, Efo Joseph says, Winston, please ask him, what if I'm contributing to all these and didn't live to enjoy it within 10 years? More money now or never? There's no guarantee that I'll live long.
For the people who ask questions like Efo, they don't die now. Efo will live to 95 or 100. The point is, we all don't know tomorrow. Remember last week when we had a conversation, I talked about 5 important areas of planning. I talked about housing, retirement, children's education, giving back, and then high life. So let's plan for tomorrow, but don't defer the joy of today for tomorrow. But it's a problem if you are making money and you say we don't know what will happen, so you are chopping everything today, because such people, they don't die. They live long.
Yes, but on the DDEP, someone says after the DDEP and the financial sector cleanup that eroded our confidence and messed up our funds, how do we protect our funds against such happenings?
Well, I mean, like I said, the way you do it is through diversification. But what we are also introducing at the moment, we are working around some insurance that will be announced very soon, so that at least you have some cover when it comes to investment. I mean, one of the lessons from the domestic debt exchange. But like I said, my worry is that, look, let's start as quickly as possible. I don't want you to wait 5 years and then when we are having a conversation, you say, what about those of us who are 55?
On that note, let me activate the phone lines on 0302216541, 0302216541, and then 05511119997. So you can give us a call if you have a question for Paul Kofi Mante, who is Managing Director of EDC Investments. He's here to answer these questions. Someone says, I am 60 years. I remember while in school, we were advised to invest, but following
the DDEP.
DDEP.
Yeah.
Okay.
Yeah. And
as for the DDEP, Winston, it must never happen again. It must be a scar on our conscience. I mean, and it's also important to put it in context. It was a painful thing. I mean, because I am a fund manager, so I deal with customers every day, and I know the pain people went through. But it's something that had never happened. We pray it never happens, but we also need to be careful. We don't use one occurrence, one thing that happened to define the rest of our lives. Because I've been involved in an accident before. A guy who was seated 2 seats away from me died in the accident. Winston, do I say I won't sit in the car again?
No. Let's get onto the phone lines now. Emmanuel is in Accra. Emmanuel, good morning.
Good morning, Johnson.
Yes, Emmanuel.
My greenhouse is now selling for 2 million. And you're telling me that when I save my money, I'll get 2 million in 10 years' time. Will it be equivalent to my dream house?
Your dream house. So that house is an investment. We are talking about the power of compounding. We are talking about investment. So if you are building and the intention is to sell, that is an investment, Emmanuel. Remember last week we mentioned housing. Anytime you are building a house, you also need to be clear in your mind whether it's for consumption or investment. Consumption means you're going to be living in it. Investment means that it's a house you are looking at getting either rental income out of it, or you want to sell and make money. And we are discouraging you from the huge houses you are going to be living in if you are the average Joe. So Emmanuel, if you are building to sell to make $2 million, why not? I mean, we wish you the very best.
Ajiman Joseph is in Tema. Ajiman Joseph, good morning.
My uncle, I hope you're doing well.
God is still taking care of his children.
Yeah, we thank God for your life. This guy is fantastic. He came to us in our kickstart club in Tema. And this is the second time we sent him on Joy FM, and I think it's great to send to him.
Great.
Yeah, I have two quick questions.
Go ahead.
At the age of 50, if instead of going to Europe to seek for junior pastors, like to go and work to receive around, when you convert 10,000 Ghana cedis, but I say I will stay in Ghana, that amount now I will gather to travel, I will invest in farming, buy the land, and plant cocoa, which after 4 years I can harvest cocoa. And planting the cocoa, the maize, the cocoyam, the cassava, the plantain can even pay for the labor. So is it not advisable to stay and plant my cocoa? Secondly, last week the last time he came there, he spoke about somebody having a building in a place like Dowenya, but will use fuel to travel to Accra to work. So now, if I'm in Tema, come to 9, instead of going to build at Dowenya, and with this wahala of traffic issues, and I have some land, or let's say a building that I can change to suit me in Tema, come to 9, why can't I do it so that if I'll build over there just for estate purposes?
Okay.
Thank you, Joseph Jemine. So the second question, you see, it is cheaper to live on a quarter plot closer to your workplace than to live on an acre of land far away. It costs you time, it costs you money. And you see, let's not add emotions to it. It may be your own house at Dowenya or wherever, Budumburam, wherever. Sometimes it's cheaper to live in a rented house than to live in your own house. So my advice is do the math, do the numbers. It's as simple as that. Take out emotions, do the numbers. If it makes sense, and I've seen not one, not two, I've seen several people who have moved into rented places closer to town, and it's cheaper for them to pay rent even when they haven't rented out their own houses far away. It's cheaper to them. Okay. So let's do the numbers. Then the first question was on whether it's not advisable to invest in cocoa farm. Why not? I mean, you can invest in cocoa farm, just make sure you get it right. The same way we're talking about risk, investing in cocoa farm does not mean it will not come with any risk. But the other advice is, as you close into old age, get closer to financial assets than hard real assets. The closer you are, a man came to me who has 4 houses, who needed, I think, $10,000 for a surgery, and he didn't have the liquidity. So if you can have the balance as you are growing, if you love properties, why not go ahead? But as you are growing, make sure you also have cash, something that can easily be liquidated into cash, because when an emergency comes, you can't say I have a house.
You need the physical.
You need a cash.
Cash.
Yes.
All right.
So as you are growing, get closer to liquid assets. Yeah.
Let's go to Southla, where Chidiak is. Chidiak, good morning.
Good morning, Winston.
Yes, sir.
Beautiful ideas amplified. 1, the banking clean-up. People's money got locked up. People die. What he's preaching there? Didn't the people do what he wants them to do? But they died, their money was there. Pensioners' funds, was it not protected? At the end of it, didn't they die? So how much of security is he coming to tell us here right now that when you have your money, it's be there? And at the end of it, banking cleanup, security, everything is gone. He must understand that that thing that happened has destroyed their business. So they must do something about it. Thank you.
Thank you, Chidi. Good feedback. And like I said, it should never have happened. But like I have also mentioned, we are looking at things like insurance, among other things, to give protection. But it's not everybody who invested who lost money during the banking cleaning up. So it's a painful exercise. It's a painful, and even the banking cleaning up, we need to put it in context. Those who had monies with regulated banks got their money back. Some delayed. It's rather the domestic debt exchange, and sometimes we confuse the two, where the haircut took place. And even with the domestic debt exchange, those who have been patient have almost recovered whatever they lost during the crisis period. So Chidi, it's good feedback. I think what we can do, lessons we have learned out of this is diversification. And we're trying to add some insurance and all that to make sure that the business bounces back, because we are not doing this just for ourselves. It's also to help people plan their future. I mean, I have a client who is 95 who has been living on investment till now. I have a client who retired 2004 who has been living on investment up to now. So we cannot throw the baby away with the bath water. Let's ask ourselves the lessons out of what has happened and make sure we do it right.
Well, you can also join us on 0302-216-541 and then 0551111997.
There's a question from SY, and she wants to know whether to liquidate her dollars and invest in the market in Ghana or just keep her dollars in her account.
That's why. They are some about. Okay, when you look at the numbers over time, the return you make in cities outstrips the depreciation of the currency. I mean, I've done 5-year averages right from 1990. 5 year. The return you made, the cedi has always depreciated. I mean, last year we saw unprecedented appreciation, which was great. But even in the years of depreciation, when you look at 5-year averages, you are better off investing in cedis than just holding the dollar. And this is history that confirms this fact. Yeah.
Okay. Joanna is our next caller. Joanna, good morning. Hello, Joanna. Okay, I think we may have lost Joanna. So, Joanna, please try and get in touch with us again on 0302-216-541 and then 0551111997, 0302-216-541 and then 0551111997.
You know, Kofi, I've been listening to Paul, and I'm just likening what he said to something we did in school, principles of sustainability, right? So efficiency, consistency, and sufficiency. So efficiency, if you want to grow your wealth, you need to cut down on all the waste now. So if you are living probably in, say, a 7-bedroom house, you are only using 2 rooms, but you're maintaining this house and everything, you need to cut down to a 2-3-bedroom house and save on rent and utilities and maintenance and all those things. Then you have extra money to save, right?
Yeah.
If you are driving a V8 within the city every morning
that you don't need
in traffic, you may want to downsize to a 1.0 liter or a 2.0 liter car and cut back on your fuel use, right? And the consistency is have a consistent schedule and put money down all the time.
That is a game
Don't
changer.
do 3 months and leave it for 6 months
That's
and come
a
and
game
do 1
changer.
month and right.
Okay,
Yeah.
let's go to Asante Mampong, where Kujo is. Kujo, good morning.
Money. I've been also struggling to save for
Hello,
many
Kujo.
years now. When
Kindly speak up a bit for
I
us.
go for it. When I do, I go for it. Now I am in my 40s now. How do I also help myself in my retirement age?
Okay.
What he said? What?
It says when Kujo, if I hear you clearly, you say when you save, then you go for it. When you save, then you go for it. But you want to know how you can sustain it. Okay, yes.
Yeah. Don't go for it. Don't go for it, Kujo. And I understand. But when you are looking long term, and like I mentioned earlier on, you must have a certain end in sight. And when your focus is that end in sight, it helps to bring some discipline. So, Kujo, you just have to make up your mind that because of my old age and retirement, I'm not going to go for it. Because I wish that people who are on retirement will share their monthly pensions with us. It's nothing to write home about.
Not at all.
I've seen people who retired, got lump sum of less than 20,000, monthly pension less than 1,000 Ghana cedis. So we are saying that plan to do something for yourself. beside this monthly pension you'll be getting and all that. And listen, the other point is that we have a huge number of people who are even more than 60 who don't get any monthly pension, because there are very few in the formal sector. And it's even more important for those people to put some money away towards the future.
Okay. Okai is a new Botiano. Okai, good morning.
Good morning.
Yes, please.
Yeah. Look, your consultant is talking mostly about young people. You know, you told him it's never too late.
Forgive.
So if you talk to us about people who are also in the age bracket of 60 and above.
Okay.
Okay.
If you don't mind, how old are you?
I'm 53 years.
63 years.
52.
Okay.
52.
Yeah.
Okay.
Yeah.
All right.
Yes, okay, forgive, because the subject matter was the power of compounding. We were looking at starting early. So it's looking like we are focusing on people who are younger. But if you are older, better late than never. Like I said, I know people who are in their 80s. So even if you are more than 60 years, it doesn't stop you from starting. It's better late than never. So okay, this applies to everybody. Just that the younger you are, the better you are positioned to take advantage of the power of compounding. But it doesn't mean that if you are old and elderly, you cannot. I mean, my oldest client is 95.
Still investing?
Yes.
Well, we need to be wrapping up. But in wrapping up, for that person listen to us, what should he do today to ensure that he takes advantage of compound interest?
Yeah. They shouldn't wait. Waiting is expensive. I mean, when we talk about this, 3 things has hindered people, or 3 things will hinder you from taking off. 1 is procrastination, 2 is excuses, 3 is blame. We need to deal with this self-imposed limitation. So if you are listening to us, you shouldn't be one of those saying that I will start when my income increases. When I settle down first, I will invest later. Waiting is the most expensive decision in investing. When you delay investing, you don't just lose money, you lose time. Yeah, and time is one of the things money cannot buy back. You cannot buy back time. So the biggest enemy of compound interest is procrastinating. Please don't procrastinate. So those listening to us, you got to take action today, because you will not find the money. You will not find, if you are waiting to find money, you will not find the money. You have to redirect money that you are already spending into investment. It's the way to start. And it's interesting. People take loans for 5 years, for 4 years, and they are repaying 3,000 a month, 4,000 a month. During the period of the repayment, they still eat. They don't die.
Okay.
But once they are done with the last repayment, they switch back to...
Paul, before you go, someone says, please assist me. I'm retiring in 3 years. If I do 10K monthly now, how much will I have in 2029?
Any lump sum. We limit the conversation.
To monthly 10K. That's a text message the person sent. How much will that be?
Just a minute. So if we did 10K
for 3 years.
For 3 years without any lump sum, just 3 years. Just a minute. Check for you. I'm sorry, the model I'm using now, I have up to 5 years. So I will still mention the 5 years and encourage the person to make time and come so we have a conversation. But in 5 years, we'll be looking at about 941,000.
941,000.
Yeah.
Paul Kofi Mante, thank you very, very much for joining us. In case someone wants to reach you at EDC, how does a person do that?
They should call our contact center number 0302 634165 or call Emmanuel on 0246 455804. If you call any of these numbers, you can reach us. Please take note that if you want, David Chilton, the wealthy barber, says the best time to plant an oak tree is 20 years ago. and the next best time is now. If you want to take advantage of the power of compounding, you should have started 10 years ago, 15 years ago. If you have delayed already, don't beat yourself too hard. The next best time is now. Let's start now.